Welcome to your Mortgage Insider update for Monday, November the 18th. We're past the CPI and the PPI, Producer Price Index, and Consumer Price Index coming in as expected last week. All right, we're going to take a look and see where interest rates have landed in the wake of that. Not a lot of big news coming up as we get a week before the Thanksgiving holiday, so that will shorten next week and then take us into December. So let's take a look. We'll start this week with the 10-year Treasury at 4.45%, just under the 4.5% psychological barrier, as well as a Fibonacci retracement. Mortgage bonds are down 7 basis points. They have not survived all that great, but they are also bouncing along of support that if we can just go a couple more weeks and get an unemployment report, that would lead us into the next Fed meeting coming up in mid-December. So we can see last week a little instability with rates up and down, then ultimately higher, hitting the Fibonacci retracement at 4.5%. Bounced off that just on Friday, settled down, settling today, still 3 basis points or 2 basis points higher right now, but in a range with not a lot of big news on the horizon. We're hoping that this level of support will cap the interest rates on the 10-year, and we'll also take a look at how that affects the mortgage-backed security. So as we switch over to mortgage-backed security pricing, the price reflects the investor's cost to buy the mortgage bond, not the consumer's interest rate. So as the investor pays a lesser price, they're demanding a higher interest rate of the consumer. So we see the inverse here, where the prices have fallen into the end of October, early November, with a lot of volatility coming into the CPI numbers. Also hanging out at a level of support. If we want to look back in time, that takes us back to early July. So we're basically sitting on the rates that we found ourselves stuck in over the summer months after the improvements into late July and early August. So that does leave us with higher overall interest rates. We are scraping the top of almost 7% on 30-year mortgage rates. So we'll keep an eye out for this and come back next week with another update. Take care.